My name is Horst. I established the IC International Campus AG together with my co-founder Rolf Engel, sitting over there. That's nearly 7 years ago. In summer, it's 7 years. We are focusing on student housing and the offers for young professionals mainly, and everything is taking place under a product brand which is always starting with the fizz, like gin fizz, something which gives you an impression of something sparkling at that end. The strengths we are proving managing houses is to install communities that's backed by the functional design of the buildings first, and secondly, much more important, by fantastic people running the houses from inside. That's one thing. So our domestic market is Germany. We've started the business here, and now we are, let's say, expanding. We have a company, IC Netherlands BV, seated in Amsterdam, where we are developing and now starting operations as well. In the past, for the first 5 in Amsterdam, we cooperated with Duvo. They have been taking operations, regulated market. We had to learn how it works and to export our brand and the idea of the product to a strange market. We are in Vienna. We have opened the first house in Vienna last autumn, 632 units for students and partly young professionals. We are expanding in Vienna. We have one site under construction, which is an expansion of this existing one, and we have another one. We are starting construction, and now we are in Prague in a joint venture with some of the well-known development companies, doing first in Prague, and we have a joint venture in Budapest as well. So that's one of the reasons I'm here. And since Monday we have published that we have been empowered by a new shareholder. That's Brookfield taking over the controlling stake in IC AG. So, and the reason is we are a fully integrated platform. We started to raise funds, to manage funds in Luxembourg. Is our GP doing that. We have established 2 funds with institutionals in the Netherlands, and we have a big fund established here not here but in Germany, doing let's say co-investment in the German market with Allianz Real Estate and a big Dutch institutional as well. So, and now we are in the position that we will envisage to do over the next years something which means a portfolio volume overall on balance sheet up to 2 billion. That's the idea.
Okay, good. So there's going to be capital flows coming from you into CEE. Very interesting. Good.
From America and Canada, maybe. Through us. Yeah.
And there was mention of the government of Singapore.
Yeah, very nice people.
Ian, I noticed as well in Mark's presentation. Just a quick update on for anybody who doesn't know. Just give us a quick overview of P3 and the region.
Yep, Ian Worboys, CEO of P3 Logistic Parks, and as it says on the tin, it's logistics, and that's the majority of what we do. We own 4.1 million square meters of warehouses across Europe, and about just over 55% of that is in Central Europe, in Romania, Poland, Slovakia, and Czech Republic, where I live, which actually is our biggest amount of space we have in one country is in the Czech Republic. And the reason the joke on Singapore is that we were bought end of 2015 by GIC, which is basically the money of Singapore, and that is what we invest and give returns. And in the past year, that's allowed us to grow about 25%. So it's been a fantastic year, and hopefully we can do the same again this year.
Great, good. Luke.
Great. Luke Dawson, Managing Director and Head of Capital Markets for Colliers across Central Europe, so covering off Czech Republic, Poland, Slovakia, Hungary, Romania, Bulgaria. I'm sure most of you know what Colliers is. We don't just rent boats in Cannes, we're a commercial advisor. We've been active in Central Europe for over 25 years with offices in all of the markets. So we'll get more into it when we get into the discussion, but obviously it's been a great last few years for not just the market, but for Colliers and I think everybody in the market in Central Europe. So it's just now more a question of what does the future hold. So we'll get on to that today.
Good, Martin, and obviously if you're ever in need of student housing, Vienna, there's a chance for you there. Just give us a quick overview of
Yes,
Worboys.
thanks a lot, Richard. Martin Sabelko, born Austrian, working in the region since '86. So meaning I was spending my working days in the early days waiting at the border to overcross the borderline, the border to Czech Republic, Hungary, and the countries we're talking in here this afternoon.
The old monarchy road.
I'm not a monarchist, but I like the big Austria, the former days. by many means, because legal system, even the Germans have copied our law book 1811, published by Maria Theresia. So don't get that wrong, but there is a history line as well. So saying that, I was in the region since '86, and in those days nobody was really thinking, even not my parents, that they will open up and said, Martin, you're wasting your time. History has shown different. I had the opportunity in many different positions to build up funds to buy and sell properties in from Poland to down to Romania. I keep it short. The last 12 years that's been 2.4 billion, and Mark, the 2 billion which have been disposed in 2016, 1 billion was one of my funds I built up from Sabelko Global Investors to a Czech investor, local investor. So out of the 2 billion, 1 billion was a platform sale. And then coming back to Austria, where my kids and my family lives in mid of 16, I was wondering if I can forget about Central Europe, and I'll make it short, I couldn't. So Warburg-HIH Invest asked me to help them in the rollout of their subsidiary. Vienna is the first subsidiary where we oversee on a daily basis investments in the countries we talk today. And that might be the reason why I'm sitting again on a panel with the colleagues I honor most, and thanks for inviting me.
Good, pleasure. And this session is for you, so if you've got, it's a small enough area here, so if you've got questions that you want to ask, please do, share them with us, and if I haven't noticed, just make sure that I do. Let's just pick up with differences, Ian. Maybe just what's your view? We obviously know the difference between 1986, which is quite substantial, but what's your view on the difference that you're seeing, both in terms of flows from, let's say, from MIPIM last year, over the last 12 months?
I think obviously in the logistics sector there have been some very big deals done. You know, CIC bought Logicor, GIC bought us, and Gazey was sold as well. So you had a lot of the money people talk about suddenly flowed from the east into, especially logistics here, and so that's been quite a big change in our markets. And there have been further sort of sales, but I think we're seeing investment from all over. Previously, we were owned by Texans and Canadians, so they then sold to the Singaporeans. Before that, we were owned by the Arabs from Bahrain. So I think over the years things have been happening, but certainly everyone talks about this big wave of money from the Far East, and that's happened. And I think there's a lot more to come. I think there's a lot of the other countries out there that will be investing into European property, and Central Europe's become recognised. I mean, Poland was the first to be recognised as, it used to be sort of Western Europe, and then there was the rest. But now Poland, Czech Republic, certainly Slovakia, probably until last week, was seen as pretty safe places where people would invest.
And Horst, as a kind of potentially new investor coming into the more broader CE regions. What's your view on that? Do you see that we're talking about, rather than Eastern and Western Europe, we're talking more about Central Europe, and do you think that creates more confidence for the likes of Brookfield and yourselves to then invest, to take German, US money, Canadian money into those regions?
I think to view on these markets as Central European markets is the better way, instead of having differentiating in East and West categories. I think we went down the road 20 years or 40 years since GDR was ending in our own history, and a lot of things has happened. What we are looking to is not to conquer markets in general at that end. We are looking into cities where young generation wants to stay for a while, studying, co-working in startup, on projects, whatever, where the employers market is attractive in us. So cities like Prague and Budapest, Krakow, Warsaw, there's no doubt about that. They are attracting a lot of people coming from different destinations to those countries for a while. And we are offering something which is not far away from hospitality. So if hotels starts booming, we know there's a lot of awareness of, and people wants to go there and to have a look into that. We identified something like as a process taking place in Portugal. So a lot of things being, let's say, basics for real estate underwriting is not working, but it's Lisbon is one of the hottest places for the young generation. You can see it in all categories of co-working startup or whatever. So that's where we find our angle, to identify places where we can imagine to be invested. That's one thing. The other thing is the fundamentals in terms of real estate business must work. So I'm happy to learn that the wages, the net wages, are increasing, and there's more power to buy, more power to pay. Our business is not working in such cities if it's not driven by at least 50% of domestics. That's not working. The internationals are on top. So we have some places where you can address a specific international community. We want to offer something where people are coming together for a while, and we are organizing that they are mixing up, being international in an environment which invites to stay for 2 years, 6 months, up to 2 years.
So from your point of view, you actively need the GDP to go up, you need wages to go up, because that allows them to afford your product, in essence.
Yeah.
But for you, Ian, that's slightly more difficult, because obviously you've got to have quite a few workers, I guess, in terms of the logistics platforms, which makes it more difficult to hire, because the wages go up for your clients, for sure.
Yeah, I think the logistics sector works on very low margins, so wage growth is a worry to a lot of the logistic providers. But actually at the moment, it's more trying to find the people to work in the warehouses, which is driving some changes in the market. And more drive changes as we go forward. We at P3 hold a conference every year, and that looks at how artificial intelligence and what changes will happen in the world, which will then allow us to change how we build warehouses. And I think more and more we're seeing artificial intelligence will replace a lot of workers, whether it be forklift trucks, people packing, etc., etc. So that's going to release workers out. But that's happening. You can see Amazon in the way they use robots in their warehouses already. There are changes happening, and I think governments haven't looked at the big changes that will happen as more and more artificial intelligence takes over from human jobs.
Okay. Just in terms of the capital flows, Luke, are you? I mean, we've seen what Mark has said about who there have been. Are you seeing new capital also coming in? And also just pick up on, obviously there was the issue in Poland in terms of Griffin that is still working its way out.
Yep.
Do you think that's going to have an impact on South African capital especially?
Well, I'll start with South Africa. I mean, I think the Griffin situation is slightly different. The larger story around South Africa right now is that the South African investment into Central Europe was partially, or some would say largely, driven almost as a currency play against the depreciating rand. So with the latest elections, it's brought stability into South Africa in theory. I mean, stability in South Africa is a bit of a catchphrase, but it's not actually as stable as people would like, but it's getting better. So what's happened is the rand has strengthened, which has then put pressure, I think, on a lot of these funds that have been active in Central Europe in the sense that their proposition to their investors is somewhat less attractive because they were also, I think, almost up to 10% of their return was based off of the currency. That shifted. I think from what we've seen, they're still able to raise funds, but I think that you're going to see it be more selective, and you're going to see it probably get consolidated into the hands of top 2, 3, 4 investors that are coming out of South Africa. So I expect them to continue to be active, but I don't think you're going to see the growth that we've seen over the last 2 years continue from South African money. Where we're seeing other capital coming from, definitely from Asia. It's no longer just if, it's now who and when and what are they going to buy. I mean, we're currently in the region, we've got 4 transactions ongoing with Asian money that has not actively purchased in Central Europe yet. So we're seeing some people moving from kind of their discovery phase into actually signing NDAs and going through the process. So it's coming from Singapore, it's coming from China/Hong Kong, there's been Thai investment, etc. But we think this is going to continue to happen. I mean, and when you look at the Asian markets, if you think our markets are overheated, there's a reason they're coming to us, because we still look like we're a fairly liquid, open market if you're coming from an Asian perspective. So I think that's where you're going to see a big story. The domestic capital as well, I think, will continue to grow. Czech and Slovak money being the leaders, but over time you're going to see Polish money coming in, hopefully even Romanian money. Hungarian money is spreading outside of Hungary, and I think that will become a bigger story going forward. So we love the domestic story because they're committed capital that, as Mark said, is going to stabilize us. If and when, I'm sure we're going to hit a recession at some point, they're still going to be buying. So I think that for us is a great indicator, and it also gives, I guess, confidence to the outside investors that when they want to sell, there's going to be an exit. So it's all over the map. I mean, I think what we saw with the U.S. investors kind of dropping off a little bit is interesting. They were more heavily invested in the last cycle, and I think, I don't want to say it's opportunistic selling, but they've made good money, and they're probably exiting their positions, and I would expect that they'll buy back in at some point in the future.
Okay, good. Yeah, Martin, go ahead.
Just one adding about the Asian money, because I had the chance and the luck to experience Korean money in Austria and in Belgium. So we have been doing a deal. That's the reason why I'm adding this information. The Koreans have been buying under our lead high-rise in Vienna, close to 300 million. And the special thing on this deal was it was Korean pension fund money, and one of the tenants in the building was the NSA. So in the old days you couldn't believe such a story, but it's evidence. And the Koreans flying in, they are learning Europe. I'm not saying the Asians, because the Singaporeans, they are well advanced. We did also GIC in former days. They know exactly what happens if when. The Koreans exploring now Europe did it in Belgium with a 100 million deal and a 300 million deal under my lead in the first half year of 2016. And the questions have always been, is it also there in Czech Republic? How does it work in Slovakia? This is a learning phase. We are talking now 2 years in between, and you bet they have learned what they have to learn. They're waiting for an opportunity. They have also an FX upside if they invest in Europe. So I think this is the next Asian money, the next source, the next country really pushing into the next countries next to Austria, having confidence because they invested via investment manager they trust.
And just in terms of the German capital, or the capital that you've got, that you're working with, are there markets that they're particularly keen on in CEE? Are there markets that they are not keen on? So is there a yes, Martin, it's okay to invest here, but not there?
Richard, thanks for this easy question. Because honestly, I'm too old to convince any German pension fund that Bucharest is the place to be tomorrow. I think these expectations have to be managed for longer. It's very crystal clear. We have a record as a company doing investments in Poland, even in secondary cities recently, where we are very proud to have a very, very solid, conservative, it's pension fund money. So for our investors in Poland, in the secondary city, the focus definitely is on Prague, because not only we have been living there, Ian and myself, for ages, and we think we know the market, meaning Prague is drive product. Yes, if we can buy, we would. Bratislava is coming back, because my best investment the last 15 years was in Banska Bystrica. Nobody knows, I think, in the audience. So, Europa Shopping Center, thank you, gentlemen, it's still existing. and yes, there are shopping centers where you have a waiting line for tenants. It's a Euroland. It's completely without any ups and downs by politics. It's a pity what happened 2 weeks ago, but I'm very confident that will inflate within the next weeks. And it's a Euroland. And next is Hungary. All the stories of Mr. Orban. It's getting daily business, so he's closing shopping centers on Sunday, and then it's opening again, and he's doing that and this. But at the end of the day, if you look at the fundamentals in Hungary, yes, this is the question, where would you invest your own money next day? It's Hungary.
Okay, good.
The rest is then to be discussed.
I think for us, Romania for us has given us some of our best returns. Colliers did our biggest deal, by the way, in Romania. So
Thank you.
If it wasn't for Colliers, we wouldn't be there. But I mean, I think that in logistics, you follow your clients, and we've had some amazing deals in there, and we get much higher returns because it's obviously risk-adjusted return, and therefore in a portfolio like ours of 4.1 million square meters, to have 300,000 or 400,000 square meters, maybe even double that in somewhere like in Romania and around Bucharest, and we're only there at the moment, we'll all go further, is quite important to the portfolio and works well. And there's a lot of, the Prime Minister is looked upon as a joke in Romania, the lady that was put up on the screen, because she was the secretary of the leading party who controls everything. She's just a mouthpiece for them. But overall, it's changing quite fast. In the few years we've been there, we've seen some big changes. And I think it'll become, in the same way that TPG, we had to persuade them to go into, and Ivanhoe Cambridge into Romania, and then obviously for GIC they had to work out Romania. I think it's happening more and more, and the whole of Central Europe is being seen as opportunity, driven a lot, as Luke said, by the amount of money coming in, people needing to spend money.
And do you think, Horst, that also with the capital that you've got now, that maybe following what's happened with Ian, that now US capital is a little more confident in some of these other areas? So, for example, although Bucharest might not work for Martin, maybe in student housing at some point it might, and the capital would then go with that if it fitted what you needed.
Maybe in future, yes, but not for the next steps. I share the view of Martin at that end. I know Bucharest for my former professional one phase of my former professional career. So in those days, in the old days, there was always a need to have useful expenses, and that means the question is how big the leakage is of the returns at that end. Then I learned that was, let's say, more or less office development and something like that. And then I learned in the second phase you got something for useful expenses, and I don't know how it is today. Maybe everything is much more stabilized at that end and clean. That would be one number one issues we would have to check at that end. And as long as young people from those countries trying to get out and to get best education in other countries, the domestic factor is not really supporting what we are doing, and as long as internationals are not going into cities, finding them as attractive for spending 2 years of their life in such an environment, it's not a city for our core products.
Okay, good. And Luke, I mean, that raises an interesting point, really, about core money like Martin's and like potentially also, I mean, one of the discussions we've had around the global capital flows especially is Japanese money, huge amounts of Japanese money potentially coming into global markets, and obviously Europe is a large part of that. But is there really the product, aside from maybe large platform buys, which could be a potential one, is there really the product for the kind of core money that really would be that Japanese money?
I think on first glance I would say the Japanese might struggle. We haven't seen them at all in Central Europe to date. That doesn't mean they won't come. But I question whether we'd have the ticket size for them and whether they could adjust themselves to the risk in Central Europe. I would say they're going to make a push into Western Europe first, and then maybe down the road they look at Central and Eastern Europe.
Okay, Martin, you want to take that?
Just a little adding, there is Japanese money already in Central Europe, because it was I was sitting on the table, but it is indirect.
Yeah, sorry, indirect, yeah.
Because this was an experience, and I'm not stressing the time in the audience. It was one of the most experiences I had by means of traditional negotiations. And just one little quick story. My team was young, and head of portfolio management was a lady, top. And I brought her to the table, and I wanted to share. We are young and dynamic, and we are doing this deal. And then I found out that it's getting quiet and more quiet, and because it was seniority. So then I said, I'm closing this part of the session, and the ladies have to move out, and then we did the deal. It was 70 million for the ING platform, or then in the later days, Sabelko Global Investors. And they are really comfortable, but they need a splitting, a risk splitting, that not everything is in Central Europe. There has been also a portion in Austria, which is balancing the country risk. And they're the best investors you can ever have. The questions they have to question, and then it's done. List, answered, thank you, next year.
No, you're right. I mean, you've had Kojima in Poland investing alongside Panettone, and I'm sure we'll see more similar structures to that, where they're going through somebody else, or they've kind of got prepackaged deals. But we haven't seen them stepping in on individual standing assets, and I don't see that happening soon.
Okay, good. I just want to pick up one thing with you, Ian, as well. Where you've got the new Silk Road, so Chinese infrastructure coming through Europe. Do you think that's going to also mean that there's going to be more Chinese money coming into those areas around that infrastructure project?
I think China is probably it's almost trying to dominate the world through economic steps anyway. And I think if you look at Africa, what they're doing, they're buying all over the place. It's incredible. I think the Silk Road is just one of a very sensible bit of infrastructure they put in to try and bring goods across. It takes 12 days from China to Europe. And you can bring lots and lots of goods by trains. These are huge trains. It's definitely if you've got more valuable goods, you don't want to go on boats, etc. They're a good way to bring it through. And it's changing logistics, because there will start to be more and more flow from them. And they've looked in Slovakia, they've looked in Austria, they've looked in Czech Republic for where they can put these very big mega inland ports. Some have been chosen, but that's definitely going to make a difference.
Okay, good. Does anybody have any questions that they wanted to ask? Questions they wanted to put to the panel? Yes.
Well, Richard, Peter Summer, you asked us what is your opinion about interest rate, but I'd like to hear the panel, what they think about the interest rates increase and how they prepare themselves if they think they will be.
Okay, who wants to take interest rates?
I think as someone who saves some money, I'd love the interest rates to go up.
So
I think, but apart from that, I think interest rates, everyone's already building in that interest rates will rise slowly. I think if there was a sudden huge jump, I think that would upset markets, but I think at the moment people expect interest rates to go up, and as was said earlier, the pressure is there.
Yeah, we have been always discussing, and the conclusion was not within the next 2 years, but nobody knows when the last period is ending. And so your question was about 12 to 24 months. I didn't raise my hand. If it's 36 months, I will be, let's say, a bit more aware of something is going to happen. But as you think, I do not think that we will have an effect like in 2007 or 8 or something like that. In our sector, we are driven by a real demand, so that's not a exercise how to optimize taxes in different structures and so on. And the other thing is you have to have the right balance between equity and debt in place if you are financing. So we and others are waiting for the first portfolios being available again, because the owners are not able to inject the difference in terms of equity if interest rates are going up only by 100 pips or something like that. And will be another chance. So.
Yeah.
Okay, good. And I'll ask the same 12 to 24 months one next time. So next year, Horst, you'll be able to say yes. Good. Look, I'm trying to keep us tight on time. So let's just quickly now, in terms of the trends that we see for this year, for 2018. I guess what are the biggest trends, and then also for you, Luke, a little bit is, let's start with you. What do you see as the biggest trends, but also what do you think that means in terms of the investability of specific sectors in CE as well, matching opportunities with capital?
Sure. I don't know if this is a trend, but maybe I think the question that we're hearing more and more is how long are the markets going to continue to be this good? And everybody's trying to figure out when this is, I don't want to say end, but when it's going to taper off. And you've seen a little bit of it, but we've been looking a lot around the money earlier in the cycle. So how is the fundraising going for the funds that are entering into our market? So there's a record amount of dry powder sitting on the sidelines, if you want to look at it from a private equity standpoint. But what's a little bit worrying is when you look at the funds that are, I guess, tried to launch in 2017, there was only about 52% of them actually closed, which means that it's taking them longer and it's harder to actually raise the funds that will then be deployed into our markets in the future. So there's a bit of worry around that, but on the other side, you've got a record amount of capital sitting on the sidelines. So the view is that it's going to be deployed into, I would say, retail is still going strong in Central Europe, particularly in Poland. Again, I'm not sure how long that will last, but it seems like it's a fairly buoyant product right now. I think offices will continue to grow. If you look at the investment volume, say from last year, offices actually fell year over year from 2016, and I think you're going to see that correct going back the other way. I think you're going to see the retail volume shift down because, first of all, a lot of the product is traded, but then I also think that retail, there are some investors that are having a question mark around how much supply can there really be in Poland or even Czech Republic. I think industrial and logistics is only handcuffed by the lack of supply from an investment standpoint. If we had portfolios, nudge to sell, we could sell them tomorrow, because I think everybody we're speaking with, if there was the opportunity, would love to step into a platform or a large portfolio. Hotels a little bit, but it's a fairly small market. I mean, there was about a billion traded in hotels last year, which is a lot, but I think this year you'll see even more.
Okay, good. Martin?
I think it's two trends. It's that simple. The first one is stepping in as early as you can to secure the property. We are even able to make forward funding with milestones where we step in with our injections of cash. And this is the trend, I think, in all markets. When the product is drying up and quality product, you have to be quick. Secondly, also investors are asking, do you have a plan B if? And you take all the categories. You take the offices, like Concepts WeWork, one of the largest tenants in UK already in the office sector, meaning you have a potential to have shorter terms on leases and rent it out either same pricing more or less, however more flexibility. So I think, speaking to date, if 10 years leases for offices, this is something we have already consumed. Hotels, we are happy to invest, and we did, in Motel Ones and Ida City hotels, so the mid-range, not the students' communities, not the quality product you are doing, but these 3 students in a flat, and not doing the 5-star hotels, because the hotel is the only property when you cancel a contract with the provider, it's empty, and you can convert. Conversion, I think, is the big headline for the future. We are doing quite a lot in retail. If I grab out of the retail, I'm coming from the shopping center development angle, but if I take the retail parks, this will be converted into logistics for the last mile. And if you have proper answers to investors, like I tried now to share a little bit of what we are thinking, also on a university based studies we are doing now as we speak, you have always to have a plan B, and conversion might be one of the concepts.
Okay, good. Horst, what's your view on the biggest trends? And you can also, student housing, I would imagine, will be one of them.
Hopefully yes. Hopefully yes. So I cannot really judge about the big trends in CEE. We have identified the niche where we are going into cities being geographically defined as part of CEE states. That's how we are approaching. But I think in general, or in principle, 17 was the year where student housing as sector has been, let's say, much more institutionalized than in 16. That was a UK and US dominated business, and now it's visible. Institutions are investing, and that's expanding. Markets are getting the maturity, attracting companies like us. We do not luxury. We are doing something which is conceptually driven in its development and in the operations at the end as well. And hopefully let's say, I feel very strongly confirmed by our decision to go to Prague and to Budapest. So and I feel encouraged to go to Krakow and Warsaw as 2 big cities in a very strong developing economy. So that's, I think, the environment we need, and hopefully, I didn't hear anything about Resi. I think Resi is the latest getting mature market. People need to get some money to be able to buy something, to invest into their own flats. The Germans are used to be people of tenants. UK is exploring the private rental sector now. So, and I think keeping more money from earnings in the countries, they will invest in suitable offers if they are being under development and can be offered at that. And that's the environment we would like to have.
Okay, so. Good. And Ian, last word from you. What do you see in terms of, I guess, the biggest trend? Are you going to be selling things to Luke, or are you going to be asking Luke?
I don't know how much Luke's worth, so I'll have to find out afterwards. But
are you going to be asking Luke for out of town retail to convert?
At P3 we've started urban logistics recently, and that's actually to be able to give a vertical service to the likes of the Amazons, the Landos, etc., where we'll actually do last mile deliveries, buildings. So I think for us this year, that's sort of our trend. But I do see students certainly see the quality compared to when I was a student. I think they're spoilt now. They should make them hard again. They're all soft. It was tough when I was a lad.
Exactly. If their toilets don't freeze during the winter, there's a problem.